Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia and managed by our company LifeChamp. Our webinar title today is Structured Warrants, Small but Mighty. So my name is Shen Chu. I'm the moderator for this session. Now, are you looking for a unique tool that can help you to amplify your returns with limited amount of capital? Now, structured warrants may just be small, but they could be the leverage instruments that can help you to meet this objective. But of course, if the market go against you, you may also amplify your losses as well. So because leverage is a double-edged sword. So in this session, we're going to learn what are structured warrants and how do we use it to meet our trading objective. Now, before we begin, as usual, disclaimer, whatever we share in this session is only for educational purpose. In no way that we give any recommendation for you to buy or sell any listed securities that I mentioned here. If you decide to make any investment decision, you're solely responsible for all your investment risk. Now, allow me to briefly introduce our speaker today. Now, he started off in the capital market sector as a management associate at Opus Asset Management, a local fixed income fund house. He rotated primarily between the business development and fund management department, servicing institutional, corporate, as well as retail investors. Currently, he's an analyst in the equity and commodity derivative division of Maybank Investment Bank, which is the leading issuer of structured products and structured warrants in Malaysia. And so far, he has conducted multiple webinars with an accumulated audience of over 600 investors and clients with only 3 years of capital market experience. It is currently responsible for creating content related to structured warrants on Maybank Investment Bank Telegram channel, Trade with Maybank, which currently has over 23,000 subscribers. He holds a Bachelor of Science in Business Administration from the University of Nebraska-Lincoln with a double major in Finance and Economics. He is licensed by Securities Commission Malaysia as a capital market services representative for both equities and derivatives dealing. So it's none other than Mr. Jordan Chew. Jordan, how are you today?
I'm doing good. Thank you for the introduction, Shane.
Fantastic. I will just let you share your screen. Okay.
Sure thing. All right, so let's get started. I want to talk about what would be our agenda today, right? So this session, we're going to talk about structured warrants, how they are small but mighty. So hopefully by the end of the session, these are the few goals that everybody here should take away. First one is, what are structured warrants? What kind of structured warrants are out there? Second, we're going to talk about what is important when we are learning about structured warrants, right? What are the factors that affect the price movements of structured warrants? Third, how can we get started trading structured warrants? And I'm going to share a bit on where we can get some of these free tools that could help you analyze structured warrants and also find the right structured warrant for your trading strategy. All right, so get started. What are structured warrants? So when we talk about structured warrants, we can actually boil it down to three main attractive points of this investment tool. The first one is structured warrants are a listed investment product. They are listed on your Bursa stock exchange. So when it is a listed product, that also comes with a sense of transparency. You are able to go onto your respective brokerage platforms. You can check specific warrants, at what day were they traded, at what time, for how much. So this transparency component should be something important for investors. Second point, structured warrants are a useful tool when the cost factor is something that is important for investors. And this is because structured warrants usually only cost a fraction of the underlying asset price. So this becomes obvious if you're an investor who is trading Tenaga shares, for example, right? Tenaga shares today, I believe, closed at 14 ringgit plus. A structured warrant over Tenaga, for example, would cost only maybe 10% of that. To my third point, structured warrants also bring a leverage effect for our investors. So when we talk about leverage here, we are talking about that multiplier effect, multiplied returns. But as Shane rightfully mentioned, Multiplied returns could also lead to multiplied losses. So structured warrants are the leverage effect of structured warrants is a double-edged sword and something investors should take note of. Another point I want to bring up is that structured warrants are a derivative product. So derivative products are always issued over a certain underlying asset. So this can be your Bursa local single stocks, it can be your Hong Kong shares, or even we have structured warrants issued over the Hang Seng Index as well. So you might be wondering at this point, who trades structured warrants? I gathered a little bit of data. So this is something I put together with data as the end of March. So Maybank IB, we are the top issuers of structured warrant in terms of total warrant outstanding. So as the end of March, we have 1.8 billion units of structured warrants bought and held by our investors. We have 210 active warrants available to trade on Bursa Malaysia today, and that translates to roughly a 35.6% of outstanding market share in the whole of Malaysia. So why do so many people trade structured warrants? What are they buying them for? And this could actually boil down to two main use cases. The first one is for investors to amplify their investment portfolio. So in the last slide we mentioned, from the cost factor perspective, structured warrants already cost much less than the underlying asset itself. On top of that, in the structure of structured warrants, it provides a multiplier effect. So when something costs less and could return you more, that could amplify whatever trading strategy that you might currently have. The second use case would be to hedge their existing positions. So when we're talking about hedging here, we're talking about having a downside protection. So as most of us may know, we are not able to short shares on Bursa Malaysia. So when share prices are falling, or when there is a drastic market event, investors can effectively use something we call put warrants, which I will explain more in the next slide, to hedge their current long position. So these two are the main use cases: to amplify your investment portfolio or to hedge your current position. All right, so now let's talk about calls versus puts. And these are the only two types of structured warrants available. Call warrants are for when the investor is bullish, they believe that the share price would go up. That is when a call warrant is suitable for you. As for put warrant, it's for when you are bearish. Like I mentioned earlier, if you expect the share price to fall, a put warrant would be best for you, because when the share price falls, that's when a put warrant's value would increase. So some of you might have heard of company warrants before as well. So just to clarify here, company warrants are not the same as structured warrants. Company warrants are issued by the companies themselves, and company warrants can be settled physically because you can exercise company warrants in exchange for the underlying share. But we're talking about structured warrants today, and structured warrants are always cash settled. So remember, structured warrants are used to trade the value difference and cannot be used to exchange for the underlying asset. So how do call warrants and put warrants help investors gain this, right? How do they help investors get this bullish exposure or bearish exposure? And here I have the classic textbook definition of what a call warrant is, right? A call warrant gives the holder the right but not the obligation to buy the underlying share or asset at a fixed price within a specified period. So I want to use this time to break down this sentence a little bit. A call warrant gives the holder, so whoever who has bought the call warrant, the right but not the obligation. So this is actually just a very fancy way of saying you can, but you don't have to buy this underlying asset at a fixed price within a specified period, because structured warrants also have an expiry date. So this sentence, when you really look at it, it could perhaps remind you of a shopping voucher, for example. This voucher lets you buy a certain item for a fixed price before this voucher expires. And for a put warrant, it would be as a voucher to sell the underlying share at a fixed price within a specified period. So when it is a shopping voucher, it's much simpler because if you're going in to buy a Dyson, for example, the price of Dyson hair dryers are not going to change on a daily basis. But for structured warrants, which are issued over a certain underlying asset, such as your local Bursa shares, these prices could change drastically in one day, right? So so how does call warrant benefit the investor when the share price goes up? So imagine this, you have a voucher to buy a certain share for a certain price. Now, the very next day after you bought this call warrant, the share price went up by 10%, for example. Naturally now, this voucher will automatically become more valuable. Why? Because this voucher is able to give you a better cost savings. This cost savings is what we also call intrinsic value, the value that it gives to the warrant holder. And for the put warrant, conversely, it will become more valuable when the asset price falls because you can sell at a higher price as compared to everybody else in the market selling at the market price. Now, just a quick pop quiz. I've took a random screenshot on one of the one days last week. So this is actually the Maybank brokerage platform. For investors who have traded structured warrants before, maybe right off the bat, you are able to tell in this list which are call warrants, which are put warrants, and which are not structured warrants at all. But for investors who are relatively new to structured warrants, here is how we can break down and identify structured warrants right away. So I pulled two examples, and these are structured warrants issued by Maybank IB ourselves. We have YTL Power C76 and YTL Power -HG. So the obvious thing we can tell is the warrant code. You can break it down to three segments, right? The first part, YTL Power, which is obviously trying to tell us what the underlying asset is, which in this case would be YTL Power. Now, how do we tell which one is a call, which one is a put? And this is the important part. That would be at the -C or -H, the middle section. -C would be a call warrant, and for put warrants, the identifier is a -H, or in some instances, a -PW. The numbers at the end, like 76 or the letter G at the end, is the unique identifier for each particular warrant. And this is also important because each structured warrant would have different parameters. So parameters like what? Parameters like the exercise price. The exercise price here would be that fixed price we talked about in the last slide. The price where you can buy or sell the underlying asset for. And another important thing to note is the expiry date for structured warrants. So I'm going to explain more on why the expiry date is important for investors. And it's because of this phenomena we call time decay. So before we get into that, I wanted to show a quick example of call warrants versus put warrants. Here I have a screenshot of two tables. On the left side, you see the YTL Power C76. On the right side is the YTL Power HG, the put warrant we showed earlier. So this table that we see is actually one of the tools available on Maybank's warrant website. It's something we call a live matrix. So this tool is completely free and is actually one of the most used tools by our investors. So let me just explain this table real quick. Let's put our focus on the table on the left, YTL Power C76. So how this table is structured is that on the outer columns, on the most left and the most right, that is actually the underlying share price, the underlying share bid and the underlying share offer. So if we put our focus on the highlighted bar, we can see that when YTL Power is at 3 ringgit and 24 cents, and we always look at the bid price for the underlying asset because the bid price is essentially the true value of the asset. So from this table on the highlighted row, we can tell that when YTL Power is at 3 ringgit and 24 cents, our call warrant YTL Power C76 would be at 16 cents for bid and 16.5 cents for ask. And your offer is the price that you can buy it, and the bid is the price where you can sell it. So if you look up on the table, right, you will realize, as what I mentioned, when the share price goes up, that is when your call warrant would increase in value. And the converse is true when we're talking about put warrants. The put warrant will only increase in value when the share price falls. All right, so now we're going to talk about what are the factors that are important for us to first understand before we should even start trading structured warrants. So the first factor I want to talk about today is the warrant's tenure. And this relates back to the expiry date that we mentioned earlier. So the warrant's tenure is basically the number of days the warrant has left until it expires. So the expiry date is something that is fixed for a structured warrant, and it would not change throughout the lifetime of the warrant. Warrants usually have tenures of 3 to 12 months, but on average, most warrants are issued on a 9-month tenure. So because warrants have an expiry date, it also gives structured warrants this thing we call time value. So we talked about intrinsic value earlier, right? The value that this voucher brings to you, that is intrinsic value. But because there is an expiry date, there's also another component we call time value. And when there is time value, there's also another phenomena we call time value decay. So let me explain this in this slide. So structured warrants are essentially a structured warrants price is essentially made up of two components. We talked about intrinsic value, which is fairly easy to calculate. When you have a share price that is 3 ringgit and 30 cents, for example, and you have a call warrant with an exercise price of 3 ringgit, then your intrinsic value would be 30 cents. But that is not all. On top of that, structured warrants also have time value to its price. So time value would not be as straightforward to calculate, but one quick way investors can reverse calculate the time value for each particular warrant is if you use the warrant's bid price and you minus off the intrinsic value that is far more direct. Then you are able to tell in this scenario, the time value for this structured warrant would be at 20 cents. Now, what about time decay? So a warrant's time value, that 20 cents we talked about, that time value would be at maximum when a structured warrant is first issued, right? It has the maximum days until it expires. So that is when time value is the highest. So time value for structured warrants is something that decreases as the structured warrant gets closer to its expiry date. But one important thing investors should know is that the time value for structured warrants don't fall in a linear line. It actually accelerates when the structured warrant gets closer to its expiry. So a rule of thumb that we usually tell investors is that structured warrants time value would lose 60% of its time value in the last 30% of a warrant's tenure. So to give an example, if the time value for this structured warrant is at 20 cents when it is first issued, it will lose 60%. So 12 cents of the time value would go away on the last 3 months, if it is a 9-month tenure warrant, on the last 3 months until the warrant expires. So for investors who are not trying to get in and out of their positions too quick, we would always recommend structured warrants that are more newly issued. You have much less time decay on a daily basis. Now, the next important factor investors should know about is something we call moneyness. So the moneyness of the warrant can be labeled in 3 types. We have warrants that are in the money, we have warrants that are out the money, and we have warrants that are at the money. So when a structured warrant is in the money, for example, that is when it would have intrinsic value to it. And when a structured warrant is out the money, that is when the structured warrant's price would mainly be on the time value. So what makes a structured warrant in the money or out the money? If we're using back the similar example, when a warrant has intrinsic value for a call warrant, then the share price would have to be above the call warrant's exercise price. That is when it is in the money. And for a call warrant to be out the money, the share price would be below the exercise price of this call warrant. So although there is no intrinsic value for this call warrant, but the time value would make up the bulk of its price. So a quick way to look at it here would be using the same examples I had earlier, right? YTL power C76 versus your YTL power HG. So you can see here, when the share price increases, that is when the YTL power call warrant would go further in the money. And for YTL power HG, which is a put warrant, when the share price goes up, that's when the put warrant is out the money, and when the share price falls, it will slowly turn in the money. So at the money is for when the underlying asset price equals the exercise price on the dot. Now, investors might be wondering, how would you decide, right? How does understanding the moneyness help with your trading? So this leads me to my next factor. We're going to talk about sensitivity. So each structured warrant would have a sensitivity to it. And sensitivity basically tells us how closely or how quickly a structured warrant will respond to the movement of share prices. So this is quantified in terms of ticks, and I'll explain more on that later. But unlike your expiry date, the sensitivity is something that is dynamic. It is something that changes over time. And a sensitivity for structured warrants is actually dynamic because it is dependent on the moneyness, on the delta of a structured warrant. So warrants do become more sensitive when they are in the money. And I have an example for this later. So what is ticks? I mentioned ticks earlier. So ticks are actually the minimum price change an underlying asset or an asset can have. So because structured warrants are almost always below 1 ringgit, whenever we talk about structured warrants, the tick size, right? If we say that a structured warrant increased by 1 tick, we are saying that this structured warrant went up in its price by 0.5%. And for assets like your shares that range from 1 ringgit to 9 ringgit 99, each tick, the minimum price change those shares can have is 1 cent. So when we put together the two factors, right, when we're talking about sensitivity and moneyness on a structured warrant, we can see here that for YTL power C71, for example, which is 21% out the money. So anything that is above 20% out the money or in the money, we would consider it very out the money or very in the money. And you can see here that for structured warrants that are very out the money, the sensitivity would be much higher. And what this tells us is, for YTL power C71 to move by 1 tick, for this call warrant C71 to move by 0.5 cent, the underlying share would have to move by 21.4 cents. So this is how we use sensitivity. We want to see how closely would a structured warrant move, or we have to see how much does the underlying asset have to move before this structured warrant would change in price. So if we look at YTL power C76, for example, with a sensitivity of 1.9 ticks. Now, comparing that to the C71, this moves much closer to the underlying share as compared to C71. And that is because for C76, it is actually 15% in the money. the share price is 15% above the strike price of this call warrant. And 1.9 ticks meaning that YTL power actually only has to move by 2 cents. Then this YTL power C76 would follow the direction by 1 tick, which is half a cent. So here I actually have a example that I wanted to show everybody. This is kind of a use case. I believe everybody has heard of something called Liberation Day that happened in early April. So early April would have been a great time to trade structured warrants, mainly due to the volatility that we saw. On 2nd April, the United States introduced its tariffs onto the world. And because of that, a lot of markets reacted pretty poorly in April. So on 2nd April, they announced about the tariffs. And at that point, the effective date for these tariffs was supposedly 9 April 2025. So because of these tariffs, a lot of investors turned their risk sentiment off. There was too much uncertainty on the market because they wouldn't know how these tariffs would impact the earnings of all the companies in the US, in the Hong Kong, even in Malaysia. So interestingly, on 9 April, we actually saw that the FBM KLCI index, basically the bellwether index for the local shares, the Malaysian shares, actually dropped to a 1-year low on 9 April. So for investors who are already trading shares, this would be terrible news. And this would also be the time where you look into your portfolio and start adjusting, right? You're starting to see, okay, where should I get out of my positions and which part I can remain in. And for investors who are trading shares, when the market is generally trending downwards, it is usually a little worrying because there is nothing else you can do with your positions but to sell at where the price currently is. So this is where I want to introduce put warrants as a very useful investment tool. Now, from 2nd April to 9 April, we actually observed that YTL Power shares, due to the sell-off, fell by 13%. Now, if investors knew about put warrants like YTL Power HG, for example, during this 1 week period, in just 1 week, our YTL Power HG performed a performed 70% increase in its warrant price. So we also observed that there were 17 million traded volume for our YTL Power HG within that 1 week. So congratulations to those investors who have managed to capitalize on that downward trend movement. So structured warrants are also better known as a short-term trading tool. I want to make this clear to investors as well. We already know that structured warrants cost less and has leverage returns. But structured warrants should also be used for short-term trading. We talked about time decay. When an investor holds structured warrants, let's say that the underlying asset does not move for a month or 2 months. You will actually realize, if you are a holder of the warrant, you will actually realize that the warrant's value might start ticking down a bit. And this is due to the time decay. And this is also why it's important for investors to use structured warrants as more of a short-term trading tool. It is not like your underlying share where you can hold for long term and receive dividend. The strategy would be quite different here. So there's a saying where when all things rise, they will fall. And conversely, when all things fall, and if the fundamentals are sound, they will actually rebound as well. So after 9 April, when the US announced that they will be delaying when the tariffs would take effect, then we saw quite a rebound on a global scale. So even we've been seeing a good rebound on the US shares, especially your Hong Kong shares have been rebounding as well. And the FBM KLCI itself actually today hit a 2-month high. So we've been seeing some risk-on sentiment back from investors where they feel like, okay, there is less uncertainty. I am ready to get back into my positions. So for rebounds, our call warrants naturally would come to good use. So we can see that the Gamuda share price from 9 April, from 3 ringgit and 59 cents actually moved to 4 ringgit and 24. So this marks a 18.11% increase from 9 April to 30th. For investors who used call warrants during this period instead of buying the underlying share, they would have been able to achieve a 50% return instead of merely 18%. So investors who know how to utilize structured warrants, and of course, timing is definitely usually the hard part when it comes to trading structured warrants. In hindsight, it might sound all well and dandy, but during the moment, the analysis for investors should still be on the underlying asset itself. All right, so now investors might be wondering, how can I get started? Where do I go to analyze? How do I even know what structured warrants are available on the market today? So this is why Maybank actually created our Maybank Structured Warrants website. So if you ever just go on Google and search up Maybank warrants, this would definitely be the first link to pop up. So we have quite a few tools here that could be very useful for investors. And I'm going to start off with our warrant search. So this warrant search can effectively be a search engine for our structured warrant investors. You can filter out all the structured warrants available on the market just from this one page. And not only that, we will also have the entire parameters of each structured warrants listed down here as well. So you can see the columns on the top left, for example. That is when you can key in a particular underlying that you are trading. So if you are trading YTL Power, for example, you can just type in YTL Power and it will filter out all the YTL Power warrants, calls, and puts available for you. If you are trying to trade on the Hang Seng Index warrants, for example, you can do that as well. So on top of that, you can filter out on all the parameters that we've covered earlier as well. If you're looking for a particular sensitivity, or you want to filter in descending order from the least sensitive to the most sensitive, you can definitely do that on this page as well. All right, so I also want to take this time to kind of introduce our newly issued crude palm oil futures structured warrants. So this is one of the commodity structured warrants that is pretty new in the market, is first listed this year. So because of that, because it is such a new product to the market, Maybank ourselves, we started this campaign called the FCPO Structured Warrants Educational Quiz. So it is purely a educational campaign where if investors go onto our website, they go onto the educational tab, they can click this quiz, and with unlimited tries, investors just need to answer all these questions related to what is crude palm oil futures, what is crude palm oil futures structured warrants, how it works. Then if you score 100%, you will be eligible to claim an e-commerce voucher worth 15 ringgit. So you can see here that the campaign is actually only running until 17 May. So investors here have 3 more days to take part in this educational quiz to claim your Shopee voucher. So some other points I want to elaborate on when we are talking about structured warrants. Because structured warrants are a short-term trading tool, investors need to know the time, the expiry date, and why it's important, right? Because if you are an investor who is an intraday trader, right, you get in your positions get in and out of your positions on a daily basis. In that case, if you are looking or filtering out your structured warrants, you should be looking for warrants that are more sensitive because you want to capture more of that warrant price movement. But if you are an investor that is planning to hold the warrant for a longer period of time, and when we say longer period of time, anywhere from holding the warrant for 1 month would be considered long in this case, then you must make sure that you have a structured warrant that has a much further expiry because you don't want your position to suffer too much from the time decay. In terms of moneyness, when you are trading a structured warrant, and let's say your goal here is to maximize your returns, right? Like we saw with YTL Power HG earlier. So we can actually see when on 2nd April, the YTL Power share was actually above the 3 ringgit exercise price of YTL Power HG. So how come this structured warrant performed so greatly within just 1 week? And this magnitude of change, right, only happens when a structured warrant turns from out the money to in the money. Okay, so to recap a few things here, we are talking about a YTL Power put warrant, YTL Power HG, with an exercise price of 3 ringgit. On 2nd April, the underlying share price, YTL Power, was at 3 ringgit and 37 cents. After the announcement of the tariffs, with the sell-offs, risk-off sentiment, the share price fell to 2 ringgit and 93 cents. So from out the money, this put warrant turned in the money within 1 week. And that is why this put warrant experienced such a great change in its price. So if you are an investor that is looking for maximizing your returns, your warrants, the warrants that you should be looking for would be maybe slightly out the money warrants, and then your intention is for the warrant to turn from out the money to in the money. That is when the structured warrant would change in its price the greatest. So, from our warrants website, we actually have a few more tools. I may not have the slide here today, but I feel like it is useful to introduce to our investors. Beyond the warrant search we also have another thing we call the warrant calculator. So if you go onto our website and you go onto this tab, warrant tools, there's a warrant calculator option at the bottom. And if you click onto it, it actually becomes a simulation for each particular warrant. On that page, you are able to key in particular warrants, YTL Power C76, YTL Power HG, for example, and you can simulate. For example, if on 2nd April, you key in YTL Power, you use the warrant calculator to calculate, okay, I plan to sell on 9 April, and you key in your simulated price, how much you expect the underlying asset to change. From there, the warrant calculator is able to automatically calculate for you what the warrant price would be on this date if the underlying asset moved by this much. So that is one useful tool for investors to simulate their trading strategies. Earlier, I showed the two tables, the live matrix, and I say that is one of the most used tools by investors, not just because it is a reference on the relation between the underlying asset price and the warrant price, but it can also be used as a entry and exit point finder for investors. Now, because structured warrants are has this thing called sensitivity, right? Not each tick, it's not at each tick when the underlying asset moves, then your structured warrant would reflect. So what some investors rather do is they rather buy in when the structured warrant has just ticked down, for example, and then they can choose to exit when the structured warrant just ticked up. Another interesting thing that we've learned from our investors recently So we have an investor who likes using both call warrants and put warrants at the same time. So this is something we can call a strangle or a straddle. And this investment strategy is for you to be directionally neutral. When you buy a call warrant and a put warrant together, that helps you put yourself in a position where either side the share price moves, you will be gaining on one warrant. So whether it's a strangle or a straddle, that just depends whether if the call warrant and the put warrant has the same exercise price or not. And for you to be profitable by using this strategy, strangles and straddles, bi-directional calls and puts, your only thing to watch out for is that the change in the underlying asset has to be great enough to cover the cost of you buying both warrants. So it's something to look into. I know that some investors love using that on the Hang Seng Index structured warrants just because those are very volatile underlying assets. So do remember that structured warrants has its pros and cons. It is very useful if you are an investor with restrained capital, right? You don't have to buy, if you are trading Tenaga shares, for example, the minimum capital for you per lot at 14 ringgit would be 1,400 to enter into one lot. And if you buy Tenaga call warrants or put warrants in that case, it will cost roughly 10% of that initial capital. For the leverage returns, you can enjoy 70% returns in 1 week, but conversely, it's important to note that double-edged sword, right? The price could also fall by 70% in 1 week. But one of the interesting things when we relate this back to FCPO structured warrants, normally investors who are interested or we have been talking to that are trading our FCPO structured warrants, they are already investors who are more active on the crude palm oil futures market. So they are already trading crude palm oil futures, for example. And for crude palm oil futures, the initial capital is quite a sum. So although that the structural warrants for FCPO would not have as much leverage as the crude palm oil futures, but the cost factor, the fact that you don't need as much capital to enter your positions is a great selling point, or is much more applicable for all retail investors like ourselves. So that would be all from me today. Uh, let's have a quick Q&A session. If there are any questions from the floor, please do shoot them in the comments and we'll address those.
Thank you so much, Jordan. All right. So if any question to ask our speaker today, Jordan, please write your question in the Q&A box. Yeah. So the first question is, what is LA by
L
Mahalingam? I think probably he's referring to the ticker symbol something dash LA.
LA, I see. Let me try to go back to that and see. Oh, maybe Mahalingam, if you don't mind, do you mind explaining your question on what is LA? Found in capital A. Oh, okay. Interesting. Okay, Mahalingam. Capital ALA. This is something that I've not seen myself. Um, I see. It's a convertible note lah. Mm, okay. Yeah, so the LA would be a convertible note. That one is also issued by the company itself. So that would be issued by capital A. So not very relatable to structured warrants itself.
All right. Thanks, Jordan. So the next question is in what circumstances will the put warrant ticker symbol be
Mm,
named as H and
mm.
or PW?
Okay, so from what I observed so far, the ones that we see with PW is usually the put warrants issued over your Hang Seng Index. So Hang Seng Index structured warrants are actually one of the most traded structured warrants on the market. So as you can see here on this slide, this is filtered out by traded volume, and you can see quite a few HSI call warrants and put warrants. And I believe the dash PW came up after the dash H has been fully used. Uh, uh, yeah, has been fully used.
So once the H has run out, right?
Yeah, yeah,
Then you will use
correct.
PW, right?
Yes,
Right. Jordan, would you want to tilt your video camera because now we are seeing your
yes. Sorry about that.
abdominal. All right. So normally it will start with C for call warrant and H for put warrant until H runs out. Okay. For instance, in the case of H Hang Seng put warrant where there's
Mm,
so much demand, then
mm,
it will begin with PW. Right.
yeah, correct.
Now, Jordan, just now you talk about intrinsic value and
Mm,
time value, right? So like
correct.
30 cent and 20 cent, right? So the next question here is how about volatility value? Is it part of the extrinsic value too, in addition to just the time value?
Volatility value. So you're referring to the implied volatility to the warrant, is it?
Yes. Is it priced in under extrinsic value?
Actually, actually, the implied volatility for the warrant would affect both intrinsic and time value. So the implied volatility for the investors who are not familiar, implied volatility is one of the parameters that we put into our warrant pricing. There is a formula we use when we price warrants called the Black-Scholes model. So the implied volatility would be one of the input, um, and how implied volatility is obtained is basically by observing your historical volatility of the asset. So if a share has price movements that are very drastic, it will naturally have a higher historical volatility and therefore a higher implied volatility, a forward-looking volatility. So when a underlying asset has a higher volatility, it means that when you issue a structured warrant over the asset, that means that this warrant has a higher chance of it moving into your strike, moving into the money. And when structured warrants have a higher implied volatility in terms of total value, lah, both intrinsic and time, it would be more expensive, so to speak. So if you go on to our warrant search, for example, like I showed earlier, you are actually also able to filter out all the available structured warrants in terms of implied volatility. So if you go on to our warrant search and under the submit button, there is a edit columns tab. On there, if you tick everything, there is also implied volatility in there, and you are able to see at each warrant what is the implied volatility.
All right. So are you saying that the implied volatility is almost the same like historical volatility, or is there's other variables that you will consider before you price the IV?
So implied volatility is just a forward-looking volatility as compared to the historical, which is what we have already observed and normally is referenced in 30 days, 90 days, or even 180 days. So implied volatility would be derived from the historical also.
So is it the same or is it different from
It
historical volatility?
not necessarily the same. Yeah. As in the implied volatility would not always equal the historical.
All right. So the next question by Heng is that, hi Jordan, whether it is a call or a put warrant, if you use it for intraday trading,
Mm.
then a more sensitive or greater sensitive structural warrants is more desirable. Is that correct?
Yes, so that is true in a sense where you don't want to, if you are trading intraday, you don't want to enter into a position where the warrant is too out the money, and let's say the share price moves by 10 ticks. Your structured warrant would not have any tick movements, may not have any tick movements, so your intraday trading um would be at a loss because there is also a bid-ask spread for structured warrants. So if you enter intraday and there is and the underlying share price doesn't move enough for the warrant to tick up, then it would defeat the purpose.
All right. So for intraday trading, pick the one that is more sensitive, where
Correct.
sensitivity is have a lower tick. Okay, lower tick means more sensitive.
More sensitive, yeah. So
Typically,
another
at the
thing that
money
is
warrant
also,
are more sensitive, right?
say that again, sorry.
Typically, at the money warrant are more sensitive, right?
In the money warrants are actually more sensitive. So the example I showed earlier is that out the money warrants would be much less sensitive, and when it gets in the money, the warrant will actually start moving closer and closer like the underlying asset. So if Heng, for example, if you are an intraday trader, you are not only looking at sensitivity, there is another factor called effective gearing that would be quite important to you as well. And effective gearing is exactly that leverage effect, the multiplier that we are looking at on how much a warrant could return as compared to the underlying asset. So effective gearing is something that is also related to the moneyness, the delta of the warrant. If a structured warrant is very out the money, the effective gearing would be higher. So like I said earlier, for the YTL Power HG, right, from 2nd April to 9 April, when it turned from out the money to in the money, that price change would be the most drastic. And if you observe the effective gearing on 2nd April, it would be relatively high, probably above close to 10, perhaps. Yes.
All right. The next question by Mahalingam is that, I think he saw Franken. I, I think he believed, I think the ticker symbol he wrote is Franken, are having
Franken.
five core warrant which are different by 1 month. So in this case, which structural warrant or which core warrant should we look for?
Okay, let me see. Sorry, so Mahaling's question is that right now there are five Franken call warrants. How does he decide which one suits him best? Is
Hmm.
that right? So to answer that question, Yashin, it really depends on the investment or the trading strategy that the investor has. So, like I said, if you are investing intraday, you want something that would move on the day itself, so you don't lose your capital to purely the bid-ask spread. But if you are looking to maximize your gains, then you are trying to look for a money that is money. You're trying to look for a structured warrant that is very close to at the money, and it would flip from slightly out the money to slightly in the money, and then you will experience a greater increase in price as well.
All right. Thanks, Jordan. So the follow-up question by Heng is that, so for intraday trading, do we or should we also desire a high effective gearing?
Mm, mm.
So what's your
Yeah,
comment?
so yes, we can say that if you are higher effective gearing, because like I said, effective gearing is also related to the moneyness. So when warrants are out the money, their effective gearing will be high, correct? So that means it could give you a higher leverage effect. But in the same time, when structured warrants are out the money, the sensitivity would also be much higher. The sensitivity would be less sensitive. So much more ticks would need to move before the warrant would follow suit. So a good way to get around this, because your analysis, right, when you are trading structured warrants, your analysis is always still on the underlying asset, right? You analyze the underlying share, its news, its technical analysis perhaps, and then after that, you can actually go to our website, use our warrant calculator, maybe key in your target price or your target sell date, and then you can kind of simulate on what the price change for that structured warrant might be.
All right, thanks, Jordan. So in other words, effective gearing and sensitivities are inverse lah. Okay, higher effective gearing will mean less sensitive,
Yes,
right?
correct.
More sensitive warrant will mean less effective gearing, right?
Yes,
So you can't have both at the same time.
yes, correct. It's a give or take situation there.
Yep, but generally I think for intraday trading, you may want to have more sensitive, less geared kind of warrant lah. Okay,
Correct.
if you hold for longer term, maybe a higher effective gearing would be better to meet your trading objective.
Yeah, correct. And when we're talking about structured warrants, this investment horizon, right? How long you're planning to be in the position is a more dynamic, it's a much shorter timeline.
Mm, okay. So the next question by Laura Tan is that how do we identify that the issuer issue those warrants, whether is it in favor themselves or in favor of retail investors? Do we
Mm.
check the exercise price or the spread?
Okay. Interesting question, Laura. So, from Maybank IB, I believe that there should be no conflict of interest when we talked about the warrant issuer and its customers, its retail investors. So, there should not be a side to favor in this sense. And if you're talking about the spread, there are instances where the warrants have a wider spread. So on a standard basis, structured warrants should have a one tick spread, right? And this is because the spread is where the issuer earns its revenue. And it's also because of this why investors cannot buy and sell and make a profit on the same day. But when the spread is widened, for example, usually you'll see that on warrants that are expiring soon and are very out the money. Just because we do that sometimes because we are not keen on selling warrants that are very out the money and expiring soon, because it's relatively risky for our investors. And in terms of the exercise price, that one would be quite a fixed variable. The exercise price is simply for you to determine the moneyness and how the moneyness would change for each particular warrant.
Mm, okay. So can you clarify a little bit on what do you mean by it is risky to sell out a very deep out of money warrant that is
Mm,
near expiry?
correct. So when we talked about investors who want to maximize their returns, right? Because remember, structured warrants price is made up of two values, intrinsic value and time value. So when the structured warrant is out the money, there is no intrinsic value. So whatever you are paying for in terms of the warrant, that is fully the time value. And when that particular structured warrant turns from out the money to in the money, suddenly that intrinsic value would appear and would normally be larger than the time value. So that is why structured warrants who turn out the money to in the money has such a great price change. But the expiry date and why that is important is because when warrants are nearer to its expiry, remember, its time value would also be at a very low level. So for a warrant that is expiring next week, for example, and is let's say um 30-40% out the money, you in some sense at some point this warrant could turn valueless in terms of time value close to zero and intrinsic value is none because it is out the money. But if the share price really jumps up so drastically from 30% out the money to above its strike price or in the money, then you will see the greatest price change because you're buying something with minimal time value and you experience the intrinsic value suddenly appearing back in this structured warrant. So that is how you see the greatest price change for structured warrants.
All right, thanks, Jordan. Um, the next question is um, asked by Mahalingam.
Okay.
Call warrants are sensitive due to the bigger broker deciding the call warrant price, and traders are trapped during this period. What is your view?
Sorry, can you repeat that question one more time?
Call warrants are sensitive due to bigger brokers deciding the call warrant price, and traders are trapped during this period. What is your comment?
Okay. I feel like there's something to
I,
debunk a little bit. Well,
I
I'm
just
speaking
saw
on
that your
behalf.
colleague Tucker have responded. Maybe you want to expand on what he said.
I see. Well, interesting. How come I can't see Mahalingam's comments?
Because it's under answer tab.
Ah, okay, got you.
You scroll to the bottom.
Yes. Okay, got it. Yep. Okay, so Tucker told Mahalingam. Okay, yeah. So to answer this, Mahalingam, the sensitivity for structured warrants, right, is a dynamic variable. So it's not something set in stone by the issuers, and it's really fully dependent on the underlying asset price in relation to the exercise price of the warrant, right? When the warrant is in the money, it is more sensitive. When it's out the money, it is less sensitive.
All right. So the next question here is that does Maybank Investment Bank let investors buy some structural warrants at bid price, such as like some other issuers do that? So why do issuers allow that?
Okay. So Maybank IB, we for one do not sell our structured warrants at bid price. We do know that some of the issuers, so there are a total of eight in Malaysia now. There is us, Maybank IB, Kenanga, CIMB, RHB, CSLA, as well as Macquarie. So we do know that some issuers do sell at bid. So we believe that this is a very useful way to promote structured warrants, right? Suddenly, investors can buy particular warrants for one tick less, and then sell it off right away on the same day. So this is very good in terms of garnering attention, I think, on the warrant, increasing the traded volume for this warrant. But it is purely, from my standpoint, it is purely a marketing thing, I think. Yes,
I see. Just that they sell it at a slight discount, lah, correct? Because
correct.
usually
Like one tick
you sell
lower.
at ask price, ma, right?
Yes, correct.
And maybe they want to get more volume, so they sell at bid price, lah. So Maybank doesn't do that, lah, huh?
Yeah, we've never done that. Yeah, just not our part of our marketing lah. Yeah.
Yeah. Okay. Understand that. All right. So the next question is, why do some warrants have negative premium? And can you explain about the concept of premium?
Premium. Okay, premium is essentially the let me see that question real quick. So some warrants are negative premium. Okay, so for warrants with a negative premium, usually because they are already deep in the money, and that's why it has a negative premium.
Okay, so are you checking on something or
Yes, just checking on our
okay,
website.
give you a minute. All right, no
Mm.
problem.
Okay, so here you can see on my screen, um, BYD 31. Let me see. So you can
Yep.
see that BYD C31 actually does have a negative 0.13% premium. And this is because that the warrant is already 28% in the money, right? It is very considered very in the money, and the delta is at 100%. So this means that the BYD C31 call warrant is moving 100% like the underlying asset price, the BYD shares itself.
Okay, so what does premium mean?
Mm. So premium is essentially the break-even price for structured warrants. Basically, how much does your warrant have to move for you to break even given the cost of the warrant?
Okay, so if warrant with 10% premium,
Mm,
10% premium percentage as expressed in 10%, right? Does it mean that
mm.
the warrant have to move 10% in order for it to break even?
Uh, actually, that 10% would be the share price.
The mother share.
Yes, the mother share will have to move by 10% for this structured warrant to break even.
Okay.
But the premium is only applicable. The example we talked about is only applicable if the issuer holds this warrant until expiry.
Mm,
This client holds this warrant until expiry.
all right. So, uh, in reference to the example you showed just now, the BYD, right? So the
Mm.
follow-up question is that, so does that mean that the just now the BYD structural warrant with negative premium a good buy for retail investors since it's deep in the money?
Mm. So that wouldn't necessarily be the case. Because when we trade structured warrants, right, we want something that does give us a multiplier effect. So when a structured warrant's delta is at 100%, for example, then it's actually moving like for like the underlying asset. So in that case, then it might be more beneficial for the investor to either find a warrant that is maybe slightly out the money so you can gain more in returns. If not, if you are looking for something with 100% delta, for example, then it might be better off for investors to buy the shares directly. Because remember, when you trade structured warrants, you don't get the benefits of dividends, for example.
Mm, all right. So what happens if a share declare dividend on the underlying that you issue on? What would you do as an issuer?
Mm. So for the interim dividends, right, the dividends that are deemed usual dividends, nothing special, we normally do not adjust our structured warrants to those dividends. So if you are an investor who is trading calls, right, you are bullish, you should keep note of the dividend X dates for those particular counters, because we all know when on the dividend X date, the share price would normally reflect and drop slightly. So if you are holding a call warrant, and in this case, there will be no adjustment to the warrant itself, then the holder might rugi slightly, right? Because the share price would fall on the X date, and your call warrant would follow suit as well.
Mm, all right. So the next question is, what is your view on call warrant and put warrants during Trump era, okay, rather
Mm.
than Biden era? Are these more attractive right now because since there will be more volatility in the market?
Yeah, so when the market is volatile, when we see drastic changes in price movements, especially for short-term traders, right? I feel like structured warrants would then become the perfect tool for these particular investors because you want share price, because for structured warrants, no matter the prices are going up or down, which is what we call volatility, right, is bidirectional. Structured warrants are useful because you can capture both sides. You can capture both sides for calls and puts, and like I said, the analysis is always on the underlying asset. If you are familiar with a certain share and you can find structured warrants over it, consider the factors we've talked about earlier and then see which warrant has the most suitable effective gearing and sensitivity for you. But analysis-wise, it's always on the underlying asset.
Okay. So
But
you under
volatility, yeah, in general, is a good thing for warrant traders.
all right. So there's one follow-up question on the X dividend X date scenario. So is the practice common across all issuers? Okay. I think what he meant is that is it normal for the structural warrants, core warrant in particular, to drop in
Mm.
value when X date happen?
Understand. So I can't comment for the other issuers. But for Maybank IB, we do not adjust for dividends because for us the interim dividends, right? The annual dividends that happen is supposedly priced in the warrant when it's issued. But however, if we have special events like special dividends or your bonus issue, some corporate actions, right, and the dilution effect would affect the share price more than 2%, then that is the rule where we must adjust our structured warrants. So if there's a special dividend that would dilute the shares or make the share price fall more than 2%, then we would have to adjust those structured warrants.
So Jordan, you are saying that for Maybank, you have already priced in the interim dividend and the final dividend the moment when you issue and launch the uh, warrants, right?
Yes,
That's why
correct.
you are not doing any adjustment when this happen.
Yes, correct.
But for external event, you will do because bonus issue, rights issue, or special dividend, you will do because that is beyond what you have factored in. But what
Yes.
if the interim dividend or the final dividend is larger or smaller than
Mm.
what you have priced in? What would you do?
Okay. Yeah. So for interims, we still okay, if it is larger, depending how large also, then if it really affects the structured warrant itself, larger than 2% lah, is the rule we give ourselves. So if it affects more than 2% of the share price, we should adjust the warrant as well. Because if not, then the warrant would kind of be in a disadvantage in that case.
Okay, larger than 2% of the share price lah. Correct.
Yes,
If
correct.
the X dividend is larger than 2% of the share price, right?
Yes, correct.
All right, thank you.
The adjustment factor, yeah.
Mm, okay. So follow-up question from Heng is that can you explain again the straddle strategy, which
Mm,
which means buying call and a put at the same strike price?
mm. Yeah. So a straddle is essentially buying a call warrant and a put warrant with the same exercise price. So for example, I showed earlier the YTL Power C76 and the YTL Power HG. They are both issued over YTL Power. They both have the same exercise price of 3 ringgit. And they have the same expiry date, which is good. So you don't have to manage two different levels of time decay. But when you buy a call and a put like that, essentially any direction beyond 3 ringgit upon expiry, then you would be in the money on at least one of the warrant. So then the important part is that for the underlying price movement to be beyond the cost of buying two warrants instead of just one. So most of the time, you will need quite a drastic event or quite a drastic price change for the straddle to work perfectly.
Yep. So in other words, if the underlying price just move within a narrow range, you will
Mm,
likely lose money
correct, correct.
because of
So
time decay and so on. You need to
yes,
have large enough move either to the upside or to the downside in order for your strategy to make money lah.
Yeah, correct. So when you first enter into the straddle, for example, you already know your cost per pair, right? Call and puts. And then on top of that, you compare that to the um expected or the target price for the underlying asset. And if you plug that into a calculator, you can quickly calculate whether the bid change on either direction would be enough to be profitable, even if your cost is two call warrant and a put warrant.
Okay. All right. So hope that clarifies, Heng. So the next question is by Laura. Is it possible that issuer deletes the warrants before the expiry?
Okay, so this has happened before, but normally it's in the case of a privatization of a certain underlying share. Like if the underlying share itself, the mother share itself is delisting from the exchange, then those structural warrants would be delisted as well.
Okay, so what would you do with all the structural warrants that are being delisted? Would you do a settlement on the day that you take it, when you take it private?
The last trading day we would settle on that last trading day. Basically the day before, the day before it is delisted, we will
Okay,
settle.
so is the settlement is that means you make the settlement earlier, lah, correct? You make a settlement earlier if the warrant expired, if the warrant is in the money at the moment that the underlying is about to be delisted, you also do a cash settlement to the holders, lah, correct?
Correct, on the last trading day. Yes.
Mm. All right. Okay. It hardly happens, lah. Huh? It hardly happens, but yeah,
From what I heard, it has happened before, yeah, but
yes,
not
happened.
that
It's a
common.
black
Correct.
swan event whereby all the underlying suddenly got delisted, lah. Huh?
Correct.
Then only the issue will delist the structural warrants. But other than that, I think usually uh, the warrant will stay on so long that the underlying are there, lah. Okay,
Mm,
there's a commitment by the issuer uh, to the warrant holders.
yes, correct.
All right. Okay. Any more questions? Looks like we have addressed a lot of tough questions tonight. All right. I see there are a few questions where Jordan have to really get all the technical knowledge out.
Not the ones I hear every day for sure.
Yeah. When should the next question is when should one consider a straddle strategy? Maybe you can
Mm.
share some color.
Yeah, so Heng, straddle strategy is for when you are directionally neutral, right? You're not sure on the direction of the underlying asset, whether it's going up or going down, but you do know that there will be a big change. So for your structured warrants issued over your companies, for example, this will work well if there is a earnings release that you may have heard might be have higher impact, or for the indexes, uh, overall indexes, any macro events would also cause a much more drastic change. So to answer your question, a straddle would only work well if the price movement on the underlying asset is expected to be large, but you're not sure which direction, then the straddle would work best for you.
Usually people who do straddle strategy they do it at the money. All
Ah,
right.
yes,
And
yes, at the
straddle
money.
because at the money straddle is more expensive.
Mm,
So uh so it's better that you don't have any directional view lah. Okay,
yeah,
so
yeah.
if you are bullish about let's say the Trump and China tariff war, right?
Mm,
So if you are bullish, then you can buy a call warrant. If you are bearish, you think that there's no deal to be made after 90 days, then it's better you buy a put warrant.
mm,
So, but if you're neutral, you have no idea whether it will go up or go down, right? You don't know
mm.
whether there's a deal to be done, then you can consider a straddle.
Yes,
Okay,
correct.
so go up, you can also make money. Go down, you can also make money. However, it requires more investment because
Mm,
you have to buy two warrant instead of one.
yeah.
So the underlying has to move large enough
Mm.
for either leg to be profitable.
Yes, correct. So it would cost, you can imagine it costing the investor double for you to be in a position for both sides, long and short.
Yeah. So if you're not certain about a large move, then this might not work very well. Okay,
Yes,
if you
correct.
trade along a narrow range, you are likely to lose money.
Mm, mm.
Okay. And time also work against you lah. Okay, because
Yes, time decay.
you're holding two warrants, ma.
Yeah, yeah, correct. But if you buy a longer dated one, then you experience less time decay,
Mm,
basically.
that's right. Just yeah. Any other questions? All right, we have one more question here. If the underlying is neither moving within a tight range, then no point investing in structured warrant. Is that true?
Mm. You can say that is true because, like Shane pointed out, there is time decay. So if you buy a warrant and hold it for 1 month, 2 months, and the price moves by 0%, for example, you're going to realize that your capital has decreased slightly, and that is purely because of time decay. So that's
Mm,
also why we do advise our investors to trade structured warrants instead of buying and holding them over a month or 2 months.
all right. So in other words, right, if you trade warrant, not only you need to get the direction right, you also need to get the timing right.
Yes,
Okay,
yes.
when you buy the warrant, you must make sure that it move fast enough lah, before your
Mm,
warrant lose this time value.
yes.
All right. So the next question by Laura is that should we couple with other indicators before we decide to buy call or to buy put?
Okay, I think this is a good question. So, like I said, when you do your analysis, it is always on the underlying asset, right? So if you are using a technical analysis, right, you mentioned indicators. So if you're using technical analysis to trade on to do your analysis on the mother share, then that would work well as well. But after that, right, after you do your analysis on the mother share, you have a price range set up for yourself. You should use that analysis and match it with the tools we have on our website, like the live matrix, like the warrant calculator, to make sure that the structured warrant would move to what you're expecting. Because you've already analyzed your mother share on its price movements and your target prices. Then you have to make sure whether the structured warrant, with all its parameters, can deliver what you are expecting.
All right. So it looks like no more question on my panel. So thank you so much everybody for tuning into this session. So ladies and gentlemen, you just listened to the Maybank analyst from Maybank Equity Derivative Group, who is Mr. Jordan. Thank you so much,
Right.
Jordan.
Thank you, everyone. Thank you, Shane.